Alright, what's good YouTube? Welcome back to another YouTube video. So if you're new here, hit that like button, hit that subscribe button. I'm trying to hit 100 followers. We're at like 58 right now, so we're getting close. But yeah, today is January 28th, Wednesday. It was an FOMC day, and I took 0 trades today. There actually was a trade that I was looking to take, but I had a couple things wrong with it. I'm going to show you guys the exact trade I'm talking about real quick. From a pattern trade perspective, right, it was a really good trade. However, it did lack some significant factors. Bring that there. Yeah, so this right here is the trade I'm talking about. So it was a 4-hour gap tap. We took out the intermediate low, only 1 hour right there. We had, I think it was, 10 a.m. opened right here. So we had a 10 a.m. PO3 with low rising liquidity towards the upside, with HR at your stop loss, with a 1 minute being the highest time frame inversion in the leg. Also a SMT on ES. So from a pattern trade perspective, right, we have number one, we're in a high time frame PDO, which is the 4-hour. We have 10 a.m. PO3, right, once again in discount. We also have 10:30 PO3, right? We can see 10:30 opened here, put in the higher wick, came down, manipulated. So 10:30 is also in a discount. This is also the 4-hour candle, or is it? Hold up. I was set on the 15 minutes, so this was the 4-hour candle at the time, right? We opened right here. We opened right here, put in that high wick. This is the open, comes down, forms that wick in a discount. So we have, once again, the 10 a.m. PO3, the 10:30 PO3. We have the SMT, we have LR above, and we have a nice ifvg inversion, that being the 1 minute. We can see here this was the 1 minute inversion. If you go to the 2 minute, no 2 minute gap, 3 minute, no 3 minute gap, 4 minute. If it'll load, I guess it's not loading the 4 minute. Yeah, no 4 minutes, so the 1 minute was the highest time frame inversion in the leg. Now I'm going to break down why this trade failed. Holy fuck, this light is bright. Tone that down a couple notches. Jesus. So on paper right here, this looks like the perfect trade, but it failed today for 2 reasons. The first reason it failed is because the choppy price action. Okay, if I go to the 5 minute real quick, we can see market opened on this candle right here. And ever since market opened, the delivery was just terrible. Like went up, went down, went up, went down, went up, went down. Then it started consolidating, chopping towards the downside. Basically, market open looked no different than pre-market chop. You can see here, market open chop, pre-market chop. If you go to something like the previous day, we have pre-market chop, but then market opens right here, delivering super nice, right? So we have that nice price action. This is where we caught a move yesterday. But pre-market chop looks bad compared to market open. We go to something like today. There's 0 difference that you can tell versus pre-market and market open. Pre-market's chopped, market opens chopped. That's the first negative confluence into the day. If you go to the 1 hour, right? Going into the day, I was actually bearish as we had this new day opening gap right there. So that was our prominent drawn liquidity. We now did have 2 4-hour gaps defending us from going lower. So you could say, right, this long was valid because we tapped into an unmitigated 4-hour gap. Price is overall bullish. We want to go higher. Now, right, that's once again pattern trading the trend. The reason why I say that is because if you go in the daily time frame, on the daily chart, we just tapped in to a high time frame bearish fair value gap right there. We now did edge that no wick candle right there. However, if we're looking at it on a confluence to confluence perspective, right, we're really overextended. at the time we put in that wick on that bearish valley gap, we had taken out that major draw on liquidity. We had taken out all of these draws on liquidity on the left right here. So price, you can say, has quote unquote met its objective. We've taken out all this liquidity. We've tapped into a bearish gap, right? And we put in that top wick on the daily candle. So for us to be bullish in this scenario, right, it's just going solely off the lower time frame narrative, like the 1 hour, right? Without looking at the higher time frame and its actual direction. Now, the reason why taking an entry in this area is so good is because we have prominent draws above where you can say confidently price is most likely going to hit these draws. Even with these draws above right here, taking an entry in this area also is good because we can still say price is most likely to hit these prominent draws on the daily. Now, right, where this trade gave the entry right here, the only draw we have is internal. The only draw we have is a London high. Versus on the absolute higher time frames, we have no draws above that we could hit. We do have that no wick candle, but at the same time, this daily bearish gap is defending it that we just mitigated. The only other targets we have above are these right here. And when you compare that discretionally with taking an entry here and more of a discount with that draw above, this just looks way more clean. So to be taking an entry here when we're already overextended, right, isn't the best move on the chessboard, isn't the greatest decision. It is more pattern trading the model, not applying the right discretion in order to make a good financial choice. Now we did have, once again, the intermediate low get tapped, swept out. We also now tapped into this hourly gap, right? We tapped into that 4 hour. Down the 1 minute, we gave that entry out of it. So, right, you can say this is a good trade. Oh yeah, and then I'm gonna get back to this chop. So once again, the higher time frame narrative is not there, right? The 5 minute is really choppy at this point. You can say that even though the time frames are choppy, we did just mitigate that 4 hour and we had a nice flip out of it. Now the reason why this is not good, and a mistake that's commonly made, is mistaking LR right here as low resting liquidity and not chop. Okay, but in this scenario, this LR is not really considered LR. And LR and chop can look extremely similar. But in this scenario, this is not engineered liquidity. This is just chop. LR is engineered liquidity, engineered highs, right, that support the higher time frame narrative that go, right, that are engineering highs for the higher time frame narrative to take out to fulfill orders. In this scenario, all we were doing was chopping. We were not engineering any price action. It was just chop. If I go, yeah, even on the 1 minute, in this whole leg down after 7 a.m., we form small for value gap there. Small for value gap. Like the 1 minute has a couple for value gaps. If I go to the 5 minute, we literally have 0 for value gaps in the entire move down. Like, which just goes to show that price action is super choppy. Once again, aligning with the fact that pre-market and market open look no different. The higher time frame there isn't there. If this was any other day where we had like a previous day's high, like right there, we're tapping into a 4 hour. If you look on the 5 minute, we went up, like went cleanly down into that 4 hour. That shit would print. It's basically what happened over here. This setup was very clean, but we had more narrative for it to play out. Okay, we had that 4 hour gap. Okay, go back in time. We came down into that 4 hour gap. Look how clean price action was, right? Look how clean that market open is. Very nice V-shaped recovery right off rip. Inversion of the highest time frame, which was the 5 minute leg. Right, giving us that super clean entry towards the upside. Okay, with once again our draw on liquidity being that major high. That we edged pre-market, creating equal highs, tapping into a 4, having a clean ass accumulation, manipulation, distribution, AMD pattern. Now that's what you want to see going into your trades versus something like today where, break it down, right, oops, what am I doing? No high time frame targets. We already swept everything out. We're in a bearish daily gap, right? We tapped into the 4 hour, sure. You go to the 5 minute, chopped as fuck. Doesn't look nearly as nice as this price action here. Not nearly as nice. Even if this trade did play out right here, I'm sure the delivery would be it would be absolute shit. So that's another thing to keep in mind. Right, everything was quote unquote there, but what wasn't there was a discretion, and why I explained today and why the trade didn't work out. And these small details are going to be the reason that keep you unprofitable taking these lower quality setups, is because you don't have the correct discretion to avoid these pattern trade setups here. So with this video, I just wanted to raise some awareness going into this fact. If you have any questions, leave them down below. I'll kind of drop, let me go into, and then FOMC, which is completely shit today. We quite literally chopped all FOMC. Then right before market closure, we had a large move to the downside, V-shaped recovery. It was just a pretty shit day in general. Kind of go into tomorrow, what I'm looking for. So, right, it's hard to predict overnight price action, but now we have a previous day high. You can look for price to draw towards. So mark that out, previous day's high. We also now have a bullish for value gap right there. So, right, I could see, because this move is decently overextended at this point, but we're in a deep premium. I could see us retracing to that daily bullish gap. If that is the case, right, we could look to short to that low, which would also be previous day's low. So we have like a previous day's low in alignment with a bullish daily for value gap and a bullish trend after tapping a high time frame PD array. Once again, price goes from ERL to IRL, imbalance to imbalance. We just tapped one imbalance. On the daily time frame, I could see us go into this secondary imbalance here. If it drops to 1 hour, right, this is kind of, what's this FOMC? Yeah, this was the FOMC wick kind of right after FOMC, the stop raid. I could see us coming down and feeling that bounce. So just going into tomorrow, all I want to see is price really go down to this previous day's low. I feel like that's going to be the highest probability scenario. Just looking for a short down there. If we don't get a short down there, once again, could take a trade to previous day's high. However, based on price action, I definitely want to see a retracement lower. And we look really good to go down to like this quote unquote data low and that bullish gap to bring us higher. But in order for us to go higher, we have to go lower. So this is what I'm looking into tomorrow. Once again, I really don't like doing my analysis before I go to sleep, but just because I'm recording, I guess I'll break it down real quick. If you guys have any questions, leave them down below. If you're new here, hit that like button, hit that subscribe. If you want to learn more about my strategy, go on my Instagram at MoneyMaxTrades. I'm going to be dropping a lot more sauce on there. But yeah, y'all have a good one and see y'all later. Peace.